Hello, everybody. This is Dan, and today I'm back with another mortgage explainer talking about what determines a mortgage interest rate. Okay, it's a loaded question, and it's a fair question too that a lot of people have very early on in the discussions. But in order to answer that properly, there is some more information that, as a mortgage lender, we need to get so that we can give you an accurate quote to say what your rate is, which will impact, what your mortgage payment is. It could impact how much you're pre-approved for. So it certainly is important, but it's also important to give an accurate quote as well. So this is going to be talking about the different things that impact the rates, right? First off is I'm just going to put a list, okay? The bond market, which changes rates on a daily basis, it's selling and buying and trading mortgage-backed securities. So that's why rates can change daily, even from when you get an initial quote. Now, the thing is, what loan program are you using? Is it conventional, government program, down payment assistance, first-time home buyer? So what type of program you're using is also going to impact that too. In addition to what the term is. Is it a 30-year, which is the most common? Or are you looking for something like a 20-year or 15-year fixed? The shorter terms can sometimes offer a better rate, so that impacts that as well. And credit score, right? So what somebody's credit score is, typically the better the credit score, the better the interest rate will be, although that's not always true. Sometimes programs are going to have different guidelines as far as credit scores and mortgage rates, but for the most part, people are aware that credit scores can impact the mortgage rates as well. But also, what is the property being used for? Is it going to be a primary home? Is it going to be secondary investment property? Is it a single family home, duplex, multifamily? So again, details of how the property is being used and what type of property it is, condo. All those things can have an influence on the mortgage rate. And then also, once we kind of get all that information determined, and then we're looking up rates for the clients too, it's not just one mortgage rate that we have. There's options. Usually I like to start by saying, hey, here's the rate where you're paying, regular closing costs. We're not charging you any additional points to get this rate. And then from there, I can show clients options to say, if you do want to buy the rate down and pay a little bit in points, here's what those options would look like. Or on the other hand, if you want to take a little bit of a lender credit, we could slightly increase the rate that we can offer sometimes and offer a little bit of a lender credit to lessen the out-of-pocket cost too that a client has to come up with funds for closing. So those are a lot of the main items that determines interest rates. The last items I wanted to mention were your loan amount, your rate lock period, how long you have to lock in the interest rate for, and your debt ratio are another few things that can impact the mortgage rate. But I just wanted to kind of go through this too because I am happy to answer that question for somebody when they ask, hey, what are your mortgage rates? But I just wanted to also be on the same page to everybody too to say, we can get that answered for you. There's no cost for me to answer that question, but I will just need to ask a couple questions in return to make sure that I'm giving somebody an accurate quote. So hopefully that's fair. If you have any questions, I'm always happy to answer those. You can leave comments here for me. Contact me here anytime as well. Hope you all have a great day, and I'll see you in the next video.